Hello friends, welcome to Block Thrasher Daily Morning Crypto Update, your number one source for cryptocurrency news, commentary, analysis, and education. Going to have some good education for you today at the end of the show. Well, it is another great day for crypto. Not in the way that we might hope for it necessarily to be, but it is a good day. It is a good day because it is an opportunity to buy. It is a bloody market currently. It is a bloody Monday. It's a bloodbath everywhere you look. Red, red, red. We are down, and we are down pretty significantly. However, that being said, this is not the time to panic. This is an opportunity to buy. Do not sell. When you sell, that is when the institutional investors and the whales come in and they buy. There's a number of reasons why the market could be down, and it's not uncommon for the market to go down on Mondays. This is a little bit more than we've seen in the last couple of weeks, but I want to remind everyone, remember this. It was just a few days ago, not that long ago, that we were ecstatic and excited about the fact that Bitcoin had surpassed the $50,000 mark. And if we jump over to market cap quickly and look, we can see that Bitcoin is now at $50,702.64. And while it's down 11.33% in the last 24 hours, which is kind of painful, it is still at that incredible level, over $50,000. So overall, the market is still very, very much up and in a bull market, and that is good, and we're excited about that. Typically, what happens within cryptocurrency is you'll have these pullbacks, and it is a reset. It is necessary. We needed this, and then it will potentially run out. It could go lower. No one knows. You can't predict the markets at all. However, that being said, this could just be a pullback, sort of a reset where we're getting ready to go to higher levels. And there's other things happening with CME futures and things like that. A whale sending a lot of crypto to exchanges that could have caused this pullback to happen. But if you're not able to stomach some volatility, cryptocurrency is not the space for you. This is what happens, sometimes in a much more significant way than what is happening today. It's a volatile market, and a lot of people are new. A lot of people have come in over the recent months and are very excited, and they've seen some incredible gains. And this might just be, even for you, the first time that you felt this, and you woke up this morning and you were sort of like, what's happening? My portfolio just dropped X amount of dollars. That can be scary. Don't let it bother you. Don't worry about it. Hang on. Hold tight. Over the long run, if you look at 4-year segments, you can't go wrong. The numbers just demonstrate that. So don't let it bother you. Even if it continues, even if it gets worse, even if we go down 30 or 40%, hold tight. Stack more. Wait for that next upswing to come and to hit. I mean, just think, historically speaking, people that got in at $20,000 in 2016 or 2017, in 2017, and then the market collapsed. They got in at $20,000 Bitcoin. It collapsed down to $4,000 or $5,000, $3,000 at one point. If they had just held till now, they would have more than doubled their money and been doing, it'd be 1.5 almost, and be doing very well. So don't lose heart. Stay strong. Stay steadfast. Today we're going to look at our word of the day. Word of the day is Decussate. 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 That's D-E-C-U-S-S-A-T-E. Decussate. It means to intersect or to cross. To use it in a sentence, an example would be, turn to page 454 on your biology textbook and look at the illustration. See how the two skin fibers cross. They decussate. Decussate, to intersect or to cross. The history of decussate leads us back to the intersection of decum, a word meaning 10, and as, a form that refers to a unit of weight, and specifically to a copper coin cut to a half ounce. In the Roman numerical system, the number 10 is an X, right? And that is an intersection of two lines, a decussation, decussate. A man named Sir Thomas Browne coined decussate in the 17th century to discuss the crossing fibers that make up human anatomy, for instance, skin tissue. The word continues to be found primarily in scientific context today. Not a super common word, but hey, we love building our vocabulary here on the Block Thrasher Daily Crypto Update. Cryptocurrency market cap. Let's move on to the next segment and take a look at the market. What is happening with prices? Like, it's painful. Hey, it doesn't feel good. But look at that. Refresh to get the most current prices, and Bitcoin's back up almost another $1,000. Hey, Bitcoin is now down 9.43% in the last 24 hours to $51,868 currently. Ethereum down 13%. Now, you might notice as we look at this that what also happens is when Bitcoin takes a hit, the altcoins take a bigger hit. And then when Bitcoin goes up, and it usually is a leading indicator, it goes up first, the altcoins don't until a little bit later, maybe even the next day, and then they go up significantly more. So if we see a 10% drop in Bitcoin, we'll see a 15% drop in the altcoins. We see a 10% rise in Bitcoin, we'll see a 15 or even greater percent rise in the altcoins. And so that's something I always mention this to my audience. Keep that in mind. That's something to remember when purchasing. If you can wait till you start to see Bitcoin to go up. Once Bitcoin starts to go up, it can be often a good time to get in and to buy some of those alts, and to get, especially if you're trying to pull some trades rather than just invest and buy for the long-term hodl. Binance Coin down 13.72% to $250.86. Polkadot down 14.52 to $33. Cardano down 14 to 96 cents. Drop below the dollar mark. Sad to see that. We'll be back. Don't worry about it. XRP, the only one that's actually up in the last 24 hours. XRP is one of those enigmas, right? It doesn't seem to, defies logic at times. But 55 cents. Litecoin down 13.26% to 196. Chainlink down 16%, 28.54. Wow, that's quite a drop there. We've got some others that are taking pretty hard hits that are great coins, and this might be a good opportunity to pick some of those up. For instance, Uniswap down 20.37%, now at 24.47. Dogecoin down 5.6. Aave, another one, 12% down. Boy, Crypto.com. I'm not sure what's going on with Crypto.com, the Crypto.com coin. We have seen that the exchange tokens have been doing very well in the last couple of weeks. Binance Coin, if we go back up, just tore it up. It is down 13% right now, but it was up 70+% on the week. And the same for Huobi token, which has been rising. Yeah, now it's at number 20. It is also down currently, but it was up quite a bit. And then I just mentioned all that to swing back to Crypto.com, which is, love it or hate it, it's a great platform for onboarding people into the cryptocurrency space. Obviously next to Coinbase, it is easy to use. People can connect their debit cards and their bank accounts and get in and start purchasing crypto. And so that probably has something to do with it. But it has done incredibly well in the last 24 hours, up 63.39% to 23 cents for Crypto.com's coin. Yeah, very, very impressive. But as you can see, all across the board, the market is down on average 15%. It is a bloody Monday. But as we have mentioned earlier, good opportunity. Get out there and grab some stuff on sale, right? All right, moving on to the next segment. We're going to look at some of the news of the day. Is this Bloody Monday just fuel for a broader Bitcoin rally? A BTC dip fills the futures gap, liquidating $1 billion. And this might be part of the reason for this dip today, some of what might be going on in the market. A CME gap closed at around 55,504 as the price of Bitcoin steeply dropped following the new weekly candle. An important Chicago Mercantile Exchange CME Bitcoin BTC futures gap closed as the BTC USD pair suddenly dropped below 54,000 on February 22nd. So what happens is a form develops when the price of Bitcoin moves either up or down after the Chicago Mercantile Exchange closes, and this happens during the weekend and on holidays. So unlike most cryptocurrency exchanges, the Chicago Mercantile Exchange in which the Bitcoin futures and the Ethereum futures now are traded is not open 24/7. So they close down, and then when they do that over the weekend and the price of Bitcoin either goes up significantly or drops significantly, you end up having the disparity between the two, which forms a price gap. Now, why is this significant? It's significant because sometimes it can be important for that gap to be filled, or to be, for the two to equalize and stabilize back to each other. So, for instance, the latest gap formed when the price of Bitcoin exceeded $58,000 across major cryptocurrency exchanges, while the CME Bitcoin futures market closed for 2 days, and then a gap emerged there because the price on the CME was $55,000. And so when this closed, as the price started to come back together and stabilize, a new weekly candle opened, and it brought down the price of Bitcoin, and so there was a correction. So Bitcoin has a tendency to sharply correct in a short period after a new weekly candle opens. This flushes out over-leveraged longs and brings some bounce into the market. Prior to the weekly candle open, the funding rate of Bitcoin futures, I'm going to just jump past that. So this is one of the things that could be happening today. Those long positions are being flushed out, and it's bringing the market down, and it's just kind of, a needed correction. Also, another thing that occurred, which Cointelegraph is pointing out, is that there were some large deposits. I mentioned that earlier in the introduction to today's episode. But prior to the pullback, CryptoQuant found that large BTC deposits were transferred to Gemini, one of the leading U.S. cryptocurrency exchanges. So this can be an indication that whales, people with large positions, if you're new and don't know that term, are simply taking profits. The price has risen to a point where they're now feeling comfortable. I want to go and grab some profits. And a lot of traders have that philosophy to take profits. My view is a little bit different. I think you take profits if you need it for some reason, or if you're trading, that's a separate thing. Like if you're doing the day trading or intraday trading, and you just have a certain amount of money that you want to play games with, you can risk it completely. You could lose it. This is just the fun stuff for play. Then you'll take your profits, but over the long run, most people will find that if they go back and they run the numbers, if they had just purchased and hodled for 4 years or more, they would have done significantly better than if they go out and try to trade. And on top of that, you get eaten up by fees, and not so much the fees on the crypto exchanges. They're relatively low, but if you're pulling in and out, like going back and forth from bank accounts and crypto, then that will eat up a large portion of your capital, but also the capital gains tax that you're supposed to pay each time you make a trade, right? So it's just something to keep in mind and to take into consideration. Moving on, Nigeria's SEC continues to sort of backpedal on their earlier statements. They have said the world cannot be moving forward, and we will be remaining static. So a week or two ago, Nigerian SEC talked about banning cryptocurrency in the country in certain ways. However, pressure is mounting on Nigeria's central bank after it suddenly announced a blockade on cryptos, with its now stating they're going to commence market research in collaborating with Nigeria's SEC and others. Speaking at the Association of Capital Market Academics of Nigeria, Kevin Amugo, Director for Financial Policy at CBN, said, "The Committee on Cryptocurrency, headed by the National Security Advisor and members EFCC, NFIU, SEC, NAICOM, and all regulators, are to strategize and come up with a national position, not a monetary policy position." So I think what happened here was actually the central bank was the one that wanted to ban these currencies, and then the nation's SEC stepped in and said, wait a second, there's a lot of innovation going on here. What had happened was the central bank had wanted to make it such that anyone who held cryptocurrency couldn't make a deposit or withdraw their money. But then what happened was the people that were using cryptocurrency in the country didn't have bank accounts anyway, so it would have been a moot and unenforceable, and it ended up being impractical. And so the SEC, then also others within it, said, wait a second here, there's a lot of value here, and we don't want to be left behind, is basically what's happening here. So because of the interest crypto has generated, I think it's high time we reconvene and ensure that we take a national position, so that what is issued is a national position, etc. A spokesman for Nigeria SEC came out more forcefully against a ban or blockade of cryptos, with Timi Agama, head of exchanges, market infrastructure, and innovation at SEC, stating, there's a lot of investment moving into the cryptocurrency market, and for us at the SEC and capital market, it is something to look at. The world cannot be moving forward, and we will be static. No. It is our desire to do more work, collaborate as regulators, and analyze to make sure that we provide a level playing field where Nigerians, international investors, and whoever is interested in the space will be comfortable and happy. So this is good news in the long run. They've essentially taken a U-turn and are moving in a positive direction, which will be good for Nigerians, of course. Now, in an opposite move, India's financial regulators order against crypto holdings. So what's happening in this situation with this story is that the financial securities regulator in India has issued an informal warning to cryptocurrency holders hoping to raise funds in an IPO. So basically what they're saying, I'm not going to read the article, but I'm going to just explain to you, is that if you are a company that has an initial public offering, an IPO, you're going public and you're raising funds through an IPO, you cannot have any cryptocurrency holdings on your balance sheet. It's kind of an interesting thing. It's just another way that India is obviously becoming negative and not seeking to be allowing freedom, and fearful, I think, of the cryptocurrency space and decentralized finance and that sort of thing. And so they are taking these steps, and it's going to be negative for that country. What impact it might have on the cryptocurrency market as a whole globally remains to be seen. It does tend to, in the past, historically speaking, have some impact. This negative news coming out of India, the Indian cryptocurrency bans, etc. But overall, in the long term, it doesn't seem to have much influence really at all. On the positive side, Singapore is becoming a hotbed for cryptocurrency investment and for companies seeking to do business there because of their friendly regulatory environment. And in Singapore, Bitcoin is challenging gold as a store of value, according to Eugene of Gemini. Gemini is moving some of its operations to Singapore because they want to use Singapore as its starting point for expanding into Asia. Singapore's mainstream business and investor community area also are crypto friendly. Singapore-based DBS, South Asia's oldest bank, recently became one of the first traditional banks in the region to announce the launch of a native digital exchange. So this is positive. So they said, we were seeing in Asia, and Singapore especially, given that Singapore has some very thoughtful regulations around cryptocurrency, Ng said Singapore is driving a very thoughtful way for regulated firms like Gemini to operate, and the ethos of Gemini really is to work with regulations. So here are some of the highlights. Why crypto companies like Gemini are attracted to setting up business in Singapore. We like regulations, says Gemini. We welcome that. And that's the reason why we feel like Singapore is going to drive this innovation in a very meaningful way. And secondly, Singapore, ideally, it has the right infrastructure. It has the skilled workforce. It's got the right support of regulations and that sort of regime. It's going to be really healthy for cryptocurrencies, for crypto companies like us. Singapore moving in the right direction, and Gemini taking advantage of that. So we'll keep watching that. Forbes had an incredible article today. I will include a link to this in the description for the video and also for the podcast. This is about decentralized finance and how the DeFi space will change your understanding of financial systems. This is probably one of the best things I have seen written about this in quite some time. They say, the authors of this Forbes article, which is Benedict Eichmann's, Professor Isabel Welp, and Professor Philip Sandner, they say decentralized finance is likely to have a significant impact on how banks operate in the future, and even has the potential to shift the structure of the whole financial system at a macroeconomic level. Wow, that's incredible. Because before we discuss and substantiate this hypothesis, we would first like to introduce the core concept of DeFi. Now, this is excellent, and this is something I was going to touch on later on, but we'll just do it right now. If you want to understand and know what DeFi is better, here's a great explanation of the concept of DeFi. Decentralized finance, or DeFi in short, is an umbrella term encompassing the vision of a financial system that functions without intermediaries. Okay, so that's number one. Functions without intermediaries such as banks, insurances, or clearinghouses, and is operated, here's number two. So number one, no intermediaries. Number two, operated by the power of smart contracts, code, basically. DeFi applications strive to fulfill the services of traditional finance, also coined as centralized finance, or CeFi, but in a completely permissionless, global, and transparent manner. So that's what DeFi is all about. It is, number one, a system that operates without intermediaries. So no banks, no insurance companies, no clearinghouses. It is operated on, number two, smart contracts. And it is, number three, permissionless. Number four, global. Number five, transparent. Excellent explanation of what decentralized finance is. Now, this happens in the form of applications, okay? So websites, essentially, or applications on your smartphone that allow for all of these services that normally happened within the intermediary type companies, like a bank, like an exchange, like an insurance company, like to be done on the application and to be done peer-to-peer, trustless, and all the things that we just talked about. The vision of a new financial system accompanies the blockchain space since its inception. However, while it has been aspirational for blockchain in the past, the vision of a new financial system has come steps closer, and I would say that is absolutely true. In fact, there's been huge leaps and bounds that have been achieved in the last couple of years with DeFi. Since 2020, DeFi is growing at an astonishing pace, and billions of US dollars have been put into the ecosystem. The growth is mainly led by applications, also denominated as protocols, that are built on the Ethereum blockchain, and that's true. And that's going to be something that I think we're going to see changing in the next couple of years, and something that we'll be talking about a lot, something for you to watch, for all of us to watch, is how much DeFi is going to move over to Cardano and Polkadot and even the Binance Smart Chain and some of the other competing platforms that have better scalability, that have better speed of transactions, that are lower operating cost because of the lower fees of the transactions and other things like this, that have easier entry for new projects and new developments, things like this. NFT is going to be a big part of all this. Non-fungible tokens, right, which we've talked about a lot and we'll talk about more. So this is something to watch. It's been on Ethereum, but the space is opening up and the possibilities are great for how that can expand into some of these other projects. In following, we give an overview of the actors in the DeFi ecosystem from an economic point of view. So in the past, commercial banks, their primary business model was to accept deposits and give loans, right? This is how they made money. The fees, right? As you would deposit your money, then they would give a loan. There'd be interest that would be charged. They would also use the money that was deposited for investing and all these other kinds of things. Now, DeFi comes along and it allows for all the same type of services to happen, but without those fees, without that intermediary, also without having to trust that the bank is going to be solvent or be there tomorrow or be open even, right? So the recent hype around DeFi applications is largely driven by the advancement of borrowing and lending protocols such as Compound. So this is Compound website. If you want to check Compound out at some point later on, go to connect.financial, right? The Compound protocol currently has over $2 billion of ETH earning interest. It has 223 million of Uni earning interest. There's billions of dollars wrapped up inside of Compound. So Compound is one. In contrast to traditional finance, loans in DeFi are commonly secured by over-collateralization. However, companies as Aave are currently working on enabling uncollateralized loans similar to traditional finance. Aave is another one to check out, take a look at. Within Aave, there is currently over $5 billion of liquidity of crypto that has been put into Aave as to earn interest and to provide liquidity for the cryptocurrency space. So Compound and Aave are two of leading projects within this. Now, investment banks and issuers of financial instruments business model was to provide adversary role and also to process the financial transactions and to provide products such as derivatives and other complex financial instruments. DeFi protocols are now providing these without that intermediary, the investment bank or financial institution. An example is Synthetics. It is a derivatives issuance protocol. Now, if you don't know what a derivative is, basically what it means is that instead of buying an underlying asset, let's just say gold, for instance, you don't buy the actual gold, but you buy a paper. Now we would say a digital token, right? So like a GSXT, I think. I forget what the Synthetics token symbol is. But you buy that token and it tracks the price of gold. So its price is derived, hence the word derivative, by the price of that asset, gold. And so if gold goes up, that token price goes up. If it goes down, it goes down. And so Synthetics provides that for the derivatives type of market instead of using a traditional investment bank. It enables decentral creation and trading of derivatives on assets such as stocks, currencies, and commodities. Also, decentral asset management for cryptocurrencies is evolving. Yearn Finance, for example, is an autonomous protocol which searches for the best yields in the DeFi space and invests automatically for its users. So Synthetics and Yearn, a couple other leaders within this space. And then there are exchanges. Instead of the centralized exchanges like Binance or Coinbase, which charge large transaction fees, you now have decentralized exchanges like Uniswap, SushiSwap, PancakeSwap, on and on and on. There's a number. And now here's where it gets really interesting, because we haven't seen much in this space yet, but it's coming, and that is in insurance. An important function of insurance is to smooth out risks and bring security for market participants. An example of a decentralized insurance is Nexus Mutual, which offers insurances that cover bugs in smart contracts. So good stuff here. This, like I said, is an incredible article. I encourage you to go read it and to check it out. They are stating, these authors in this Forbes article, that DeFi has the potential to outperform the traditional finance system in the years to come. And I believe that that is absolutely the case. We are going to see a sea change. We are going to see a rush, a flush of capital into this decentralized space, into DeFi, because it's so much more efficient. It's better for everyone involved. You don't have to worry about trusting the third party, the intermediary. You don't have to worry about custody. We're going to see systems involved that are going to make what's happening on Ethereum now look small, I think, because there are just problems still. That this is new. It's in an infancy. There's problems with smart contracts on Ethereum. There's security issues, there's custody issues, but all this is being resolved. It's going to be resolved in really great ways moving forward, and it is an exciting thing. So for today's coin highlight, I want to bring your attention to one project which might make some headway in this space. It remains to be seen. It's relatively new in what it's doing, but the ideas and the concept here are are really great. And you can check this out at connect.financial. That's the website address, connect.financial. So what this project is doing is they are creating what they are claiming to be the world's first Visa crypto credit card. But what that means is this: no other cryptocurrency card on the market actually offers credit. Right? So unlike other cryptocurrency cards, now there are some out there where you can, like Coinbase has one for instance, where you can use your crypto to purchase things. But what it's doing is when you go to the store and you pay for your cup of coffee at Starbucks in US dollars, it sells off some of your crypto at the current price, converts it to USD, and your crypto is gone. Well, what this is doing is instead, the Connect card is a true Visa crypto credit card with they say our solution is that members can leave their cryptocurrency assets untouched, right? As they benefit from actual credit offered by Connect services. So what happens here is you put your cryptocurrency into the wallet, into the Connect wallet. It is then collateral. When you go and make that purchase for that cup of coffee, it is a credit card, right? Just like a regular credit card. It does not touch your cryptocurrency. So your balance of what your available balance on your Connect credit card is connected to the amount of crypto that you've put in for collateralization. And if you don't pay it, obviously they're going to liquidate your crypto and take it. But as long as you make the payments, it's a credit card. So you swipe it and you owe, and there's going to be a fee, whatever that, probably high, as credit cards usually are. And then you pay that off each month. And so this is something that could be really cool. I mean, it can give people who maybe they don't have a good credit score for some reason or whatever, but they have crypto, they can put it up as collateral and they can then use the service. And there's a bunch of other features that will be included within what they're doing here. So they're saying it can increase your purchasing power significantly. You can manage your fiat and your cryptocurrency. You can control the funding sources. So you can say, hey, when I go and make a purchase, I do want you to pull from some of my crypto, and I want you to use this crypto or whatever. So they have like a lot of flexibility in the control of it, and then you can maintain benefits from digital asset appreciation. So this is just this is an interesting way. There's a few other things out there like that, like BlockFi, for instance, where you can get a US dollar loan based upon the crypto that you deposit as collateral. And so this is the same kind of thing, but instead of that being BlockFi is more of you have a large purchase you want to make and you don't want to sell your crypto, right? Because you believe it's going to appreciate, but you need that money. So instead of selling off your crypto, you go and you deposit into BlockFi, and they give you a US dollar loan, and then you pay that loan off over time. And as long as you pay that loan off over time, and your crypto that you have held doesn't drop in too much in value to no longer be able to collateralize that loan, you can keep your crypto. It's a great way of keeping your crypto. And this is doing the same thing, but more on a daily, small scale for everyday transaction type of level. So when assets such as Bitcoin are loaded on your card as collateral, we'll extend a line of credit based on portion of its total value, amplifying your purchasing power significantly. This way you can spend while keeping your cryptocurrency intact. This is cool. I like this. If this work, if this project is able to complete all the development and go live and everything works as is being touted, then this is going to be good. They are going to have insured institutional grade custody for your cryptocurrencies. You are going to be able to earn interest by lending any of your assets. So just imagine the possibilities of this. This is awesome. This is like DeFi connected to a card that allows you you put your cryptocurrency in. It appreciates along with the market as it does, and you're earning interest at the same time. And then it's a credit card, and you can go buy stuff with it. And like we said, if you aren't able to make your payment, then they obviously liquidate the crypto, and there you go. So you can buy, sell, and exchange currencies. You can manage your DeFi assets and execute strategies on the go. You can borrow against your cryptocurrency holdings with cash wired straight to you. So this might be one to keep an eye on and to pay attention to. All right, wrapping things up today. Just want to do a very quick educational moment. do a little bit of an overview of some of the, I'm calling it back to the basics and answering the question, why crypto? Why should we be excited about it? Why should we be invested in it? Why should be? Here are the reasons. Just 5. And I'm just sort of throwing these quickly off the top of my head. And wanted to give you guys a little bit of this thought. Let me move this here so that we have the screen set up properly for those who are watching on the video. Number 1, cryptocurrency is decentralized. And what I'm trying to do here is, part of the reason I started Block Thrasher was to try to simplify the complexities of crypto for all the new people coming in. This term decentralized is used over and over and over again. We used it a bunch of times today with DeFi, and we did talk a bit about it. So hopefully you're starting to get a better grasp. And I think what happens is when people come into the cryptocurrency space, they sort of feel extremely overwhelmed often. And it's like this flood of new terminology and language and concepts. And you know, it can be discouraging, but the thing is just hold on, just keep listening, keep absorbing, and over time you will it starts to make sense, and eventually you'll just understand it and you'll be good to go. So this word decentralized, what it means is that instead of having an institution or a single entity, whether it be a central bank or whether it be a traditional bank or whether it be an investment firm or whatever, instead of having them in control, you have the power is spread out and it's run by code on computers across a network on nodes. So let me try to break it down a little bit more simply. Your bank has a database. That database is backed up runs on their servers. They probably have it backed up for security reasons. They have redundancy. They may have multiple data centers around the world, but it's centralized. The bank has access to it. There are people within the bank. You have to trust them. You have to trust that they're going to accurately record how much money you have in that bank. That is all held within the database. Now, if it gets hacked or if it gets destroyed in some sort of natural disaster or the grid goes down or whatever happens, there's a bad actor, that data could be lost. It could be corrupted. It could be whatever. With decentralized, it's decentralization of crypto. It happens on a technological level and it happens on just a structural level, the way that it works. So take Bitcoin, for instance. The Bitcoin blockchain is the database. So instead of a SQL database or whatever kind of database runs on a traditional application or traditional bank's system, Bitcoin has a blockchain. And that blockchain is distributed on computers, servers, mining machines, nodes. Ultimately, it's a full Bitcoin node that has the full database on nodes all throughout the world, thousands of them all over the place, right? So it creates this incredible redundancy in the sense that it's backed up, and it wouldn't matter if the entire US grid were to go down for some reason. The Bitcoin blockchain would continue to function and to continue to go on as long as there were miners and nodes running in other places of the world. So the only way to shut the thing down, to stop it, would be to shut down the electrical grid and the internet globally, and then that would come to a halt. Other than that, not going to happen. It's also decentralized in that the code that runs Bitcoin and the way the blockchain works and the way that the proof of work mining works, and POS is similar. It is reaching consensus about transactions, about who owns what coins were sent where, and all that sort of thing, through a process that is difficult. It's done by the miners and it's done by a lot of work, right? And so this is another aspect of the decentralization. It's incredible, though, in the way that it works, and it's genius. And so that decentralization, it all happens in an automated, code-driven way. And so there's no reliance upon a single person or entity or institution. And that is one of the strengths, and that is one of the reasons why crypto has value, right? There's value there. There's value in the fact that you can trust the system after, numbers of years of working and as it has to continue to do the same. Number 2, it is borderless. One of the reasons, if you go and you read Digital Gold, for instance, and you hear the stories of the people, Satoshi Nakamoto and other people that were working on Bitcoin in the early days, was they wanted to create something that would allow people to send money across the globe quickly and easily. And Bitcoin and cryptocurrency fulfills that. Again, that's another part of the decentralized aspect of it. In the past, typically you had to wire money and there were a lot of fees and there was time involved and these sorts of things. Privacy was another issue. Number 3. Now, in the early days, the thought was that crypto would be totally private. It's not. There are ways to track what's happening on blockchains in terms of you may not always be able to, depending on the particular crypto, determine who it is that is sending, but you can see all of the transactions. It's an open, transparent ledger. There are totally private cryptocurrencies like Monero and others out there that do still fulfill that function, but obviously this is one of the things that government is not happy with, and may in time. They have not as of yet completely shut down or been able to, but the IRS does have a $500,000 bounty out for anyone who can crack Monero or some of the other privacy cryptocurrencies. They don't want that. They probably potentially will pass laws and regulations that will require disclosure of anything and everything that you ever do with cryptocurrency. So the initial idea behind that was that in order for society to maintain freedom of speech, political freedom, then we needed to be able to have privacy in terms of how our money was spent. Let me explain why that is. The reason is that let's move it from the U.S. and go to another country, and let's say there was a authoritarian dictator that was doing horrific things, right? Violations of civil rights and just, maybe you can imagine. And there was a freedom-fighting, freedom-loving revolutionary element in the country that wanted to rise up and wanted to overthrow this authoritarian regime. Well, the regime is going to do everything they can to shut down the finances of the freedom fighters, and they're going to do it by shutting down their bank accounts and making so the idea being that a private, even a whistleblower that is now an enemy of a state could receive Bitcoin or could receive cryptocurrency as payment. And so because the thought was speech and thought can be shut down simply by shutting down access to finances. You can defund something. And so this was another draw to crypto, especially in the early days. Number 4, predictability. Predictable supply. Cryptocurrency is predictable. So what I mean by that is you can go and look at the coin economics of any cryptocurrency project and you can see what the total supply is, what the number in circulation is. Unlike fiat currencies in which we don't know these things. We don't know how many dollars will exist. We don't know how many euros will exist. We don't know how many are in circulation. These are unreliable factors. Now we operate within a system and we've come to trust that the dollar will have value tomorrow, that we'll be able to buy a certain amount of things. And that has been our experience, generally speaking. Now we all are fully aware of the fact that things continue to become more and more expensive nominally in terms of the number of dollars that it takes to purchase something. But purchasing power of the fiat currencies constantly decreases as the supply grows and as inflation is incurred. Cryptos are the opposite. They're not like that. So they're predictable in their supply, and this is a strong suit. And many of these cryptocurrencies have a fixed or limited supply, and it would take significant effort. In some cases, it's even impossible to increase that supply. So that predictability brings value, right? Number 5, they are useless. As we talked about in the article on DeFi, they allow for trustless exchange, and we don't need a third person party or entity. This has really become significant as of late with the creation of Ethereum and the smart contracts and the DeFi that we talked about. And that's going to just continue to be something that becomes expansive and that grows and that explodes. That wraps up the Back to Basics Why Cryptocurrency segment for the day. Friends, I appreciate your time. I thank you so much for being with me. As always, please go to blockthrasher.com, sign up for a membership there, support the work. Appreciate that so much. And as always, have a great day, and remember, it is always a good time to earn more crypto. Love you. Talk to you soon.